What's up, investors? I hope you're all being savvy with your money. Welcome to the Savvy Money Show with me, your host, Sean. I've been asked to compare a couple of companies, and I've thrown in a third company just to make it a bit more interesting. So today I'm going to be putting in Store Capital and Synchrony Financial. Sorry about that. Synchrony Financial, and to have something to compare it to, I'm putting in Mastercard, which we've all heard about. So we'll start with Synchrony Financial, just to see how they're doing. They are currently at 18.51, which is near the low. The lowest was 12 for the year. The highest was 38, as we can see there. Has a market cap of 10.8 billion. PE ratio of 4, which is very good. And forward dividend and yield of 4%. Now, when we look at the intrinsic value of that, which can change, of course, I've valued it at $21 a share. So it comes in at $2.50 under share price. Now, don't think in a couple of weeks' time it will still be valued at that share price, because lots of variables can change that. So that is what it is at the moment. Now we go to Store Capital, and we see that is $19.20. Now we can see that it's between $13 and $41 over the past 52 weeks. PE ratio of 15.5, so at the upper end of what we like our PE ratio to be. That's fine. Forward dividend and yield of 6.98%. I always say dividends an extra. We look into the company first. No point having a dividend 10-11% if the company's going to go under. We see the market cap is 4.6 billion. Now, I've already gone into the financials behind this, and funny thing is, Store Capital and, in my opinion, and Synchrony Financial all have good financials. Although the one thing that's a flag for me for Store Capital is it gives a high percentage. Although it doesn't say it down here, returns a high percentage to shareholders compared to reinvesting. So it doesn't spend money growing the company. It gives it to the shareholders instead, which sounds good as a shareholder, but as a shareholder you would rather have a 50-50 split, where some goes to the shareholder and some is used to grow the company, so that you know your company isn't going to go bankrupt, your company is going to continue to grow, and you'll continue to reap the profits. Now, I'm not saying this company is going to go bankrupt. Far from it. It's in good financial position, like Synchrony is. And as we can see, it's at $19.20 when the intrinsic value should be $40. So it's less than half what it should be. But it's just something to bear in mind that I found during my research, and you will probably flag up things during your research. You may find something that I've missed, but it's just something Now we look at Mastercard. Everyone has heard of Mastercard. 268.74. I'm sure you've looked into Mastercard before and have done your research. It's a dividend aristocrat. Sorry, it's 268.74, and I won't give us a lot of information about this because you would know already. And the intrinsic value, by my opinion, is 264, so it's about that, just a little bit above it. P ratio of 34, and forward dividend and yield of just under 1%. But then the bigger the company, lower the percentage dividend and yield, and usually you find you have to be a bit funny with the PE ratio. Usually they're at the higher end, but when they get to 34, I usually steer clear of them. It's just to give you some comparison. Some people can forgive the PE ratio. The only one I gave the PE ratio was with Tesla. But if we go to Tesla, let's see. Yeah, there you go. See, just to compare it, I bought stock in Tesla when it went to 690. Now it's got a forward PE ratio of I believe it's, because it doesn't have a PE ratio, it has a forward PE ratio of about 120 when you look into its financials, and it has huge market cap as with Mastercard, but it has a price of 701, which is just below the intrinsic value which I valued it at. Anyway, that's all for today. If you want to, if you enjoyed the channel and found it informative, please hit the like button. If you want to see more videos, please hit the subscribe button or the bell notification. If there's something in particular you want to see, please write in the comments. And if you haven't signed up for a free trading app platform, please use the links below and you will get a free share. If you haven't signed up for a cashback site, but I'm sure you have because you're all savvy with your money, and please use the link below, help support the channel, and you'll get £5 in your account. Goodbye for now. See you later.